Welcome to the Bigly Money Show. I'm Dagan McDowell, and with us for this hour, Bahnsen Group founder and managing partner, David Bahnsen. Great to see you, David, this Friday. The U.S. reaching a $250 billion deal. Investors like it, markets like it, will U.S. workers like it? David, put all of this together for us.
Well, look, I am very encouraged by it, and I do my best to call balls and strikes. I think, I don't want to rain on it at all. A lot of the $250 billion was already committed, but it doesn't matter. There's new commitments here. I'm excited. I want more of this being done in Arizona. I think that the big picture of it, I'm trying to take a wait and see on a lot of these things because there have been certain announcements that have already come that already proved to kind of not happen the way we talked about. Others that I think are even bigger. So this is the one element that I think is very supply side to get foreign capital invested in the United States. Semiconductors are more important to me being made in the U.S. than a lot of other things. I'm not a protectionist. I don't care about T-shirts being made in Vietnam, but semiconductors being made in Arizona is good for America, so I'm happy.
It's a national security issue.
That's right.
because all of the supply essentially sits on an island that China wants to take back.
It's also something we can do well. In other words, it plays to our strength, and so I'm a comparative advantage guy. We can make high-end semiconductor manufacturing in the U.S. better. That's not our strength with some of the other lower-cost items, so I think it's wonderful. I would add that when you say a reduced tariff cost for Taiwan, that's also reduced tariff cost for American importers who actually pay the tariffs. So we win-win in that because now our importers are paying less by not having those tariffs on Taiwanese exports.
So you think we lose all this if the president loses at the Supreme Court on tariffs?
No, this is not being done under the IEEPA.
I know, but the president has made the point that all the negotiating he's able to do, right, is based on the leverage of being able to do tariffs. Mike Lee was in that chair yesterday saying, man, if they lose at the Supreme Court, you really jeopardize a lot of this inbound investment. You don't think losing at the Supreme Court is going to jeopardize all of this inbound cash?
Well, first, I need to say that even if I did, which I don't, it shouldn't matter. The Supreme Court needs to do the law, and the law is that this thing is way out of bounds. However, apart from me playing the role of Supreme Court justice, I don't. And you see that all these deals that have already gotten done through the period at which everybody knew the Supreme Court was adjudicating, and I don't know if they look at prediction markets, the foreign countries that are counterparties, but they've known that the odds are somewhere between 70 and 80%. That at least this rationale will go down. I think that the president's always had plenty of leverage. Other countries have had their points of leverage, too, which is what it takes to make a deal. We've made a market in these things. But no, I think they're working the refs, Brian.
The announcement with Taiwan kind of comes after what was a pretty good week of economic data as well. And this sort of wraps up how we're thinking about markets, how we're thinking about economics. David Bahnsen can disagree with me. I know that we don't like one data point. We want to look at multiple data points. We want to look at trends.
Why is the market down then? For the week.
Only 30 points from a record on the S&P 500. So we're down, but
there's also the headline that Trump is threatening tariffs on those who don't support the Greenland situation.
The tariff threats don't move the market anymore at all. They don't. They haven't moved the market in months.
Not even the Greenland? I'll tariff anyone who doesn't let us take it over? That's a big one.
The markets don't take the tariffs threat seriously. I wonder why.
And I'm sick of people talking about the harm. And we need to start talking about more of the benefits of artificial intelligence.
I'm a big believer there's going to be a lot of really big things that come out of AI. How it makes money is different, but that it's going to be transformational is fascinating.
President Trump set to crash the World Economic Forum in Davos next week, and he's bringing his America First message directly to the people who need to hear it most. So, Bahnsen, I want to come to you because it's interesting. Larry Fink is sort of the co-chair leading the charge. Trump's going. I thought I read that Jamie Dimon, for one of the first times in recent memory, is actually going to be speaking up on the official stage. Does that help bring more relevance to have real business leaders there instead of some of these globalist talking heads that really, I think, people in America really struggle to relate to?
I don't know. I mean, I suppose the cosmetics of that are outside of my skill set because I don't think a lot about how it looks, and maybe I should think more about it. I think the president is very good at kind of reading the room and having a feel for what's going to help his brand and whatnot. To me, I'm just intuitively surprised he's even going to Davos. But in terms of having business credibility around him and whatnot, I know the president's always wanted that and always liked it, and I think he cares a great deal. I know some of the people that he has on speed dial. He values the opinion of a lot of leaders. But in terms of what it kind of looks like in a midterm election year, when he's struggling with, I mean, we talk about like inflation didn't blow out this year. It's 2.7%. It was 2.7% the last 5 months of Biden's presidency. So I'm amazed at how the narrative has changed. Like, oh, now we have low inflation. It's the same it was at the end. That's not bad, though. It's not getting worse. But my point being, I think he has messaging he needs to do that is going to be tough to do at Davos.
We're going to allow people to take money out of their 401ks and use that for down payment.
What he's proposing on the other side of this is that you've got capital committed to your home and your down payment, and you're using the value of that, let's call it 10%, as an asset to buy equities in your 401k. I have never heard of being able to use the same asset twice for purchasing power. That does not make sense to me. If your 401k was to see a loss because there's a market correction, there's not an actual asset in there to back that up.
I don't think that's necessarily what he's saying, and I kind of think what he's saying is even worse. And
okay.
So he's talking about the equity itself being an asset in the 401k.
Right. That's
your 401k has this stock and these funds, and then it has this 10% piece of your home. So what really bothers me is that it doesn't do anything to create any new wealth. Mm-hmm. It's just simply moving parts of the balance sheet of people, and particularly those who would do this are likely middle-class Americans. So they're going to substitute their need for retirement stability with a benefit in buying a home. If you have to take from your retirement assets to buy a home, I think it might call into question if you can afford it. But ultimately, what he did is tie it to the performance of the home.
I'm going to try not to be ugly.
Yeah.
To you.
No, that's okay.
But David, people are buying the home to retire in it.
To retire in it?
Yeah.
Right,
and
not to sell it for retirement.
No, just to retire in it. Like and I kind of push back on the notion that like buying a home is the American dream.
Me too.
This is a way where you don't actually, they're trying to come up with a way where you don't have to take the cash out of the 401k. And you access the 10% down payment, but the money still stays in the tax shelter.
Right.
So if your 10% down payment is still growing as a tax sheltered asset within your 401k, mm-hmm. I mean, when you go to the closing, the bank asks you for a check. It asks you you have to put your down payment down and then you get your loan or whatever as an addition. So how does the bank is guaranteed that
the check comes from the 401k.
Okay.
And then just like if somebody buys a commercial real estate thing in a retirement account, they have an interest in like an LLC inside a retirement account. You're basically going to have this illiquid asset in your 401k that represents 10% of the equity.
Down payment.
And it will get funky. It will be very subject to people to play games around it because of the tax benefits that Dagan's talking about. But Dagan, I don't think I'm disagreeing with anything you said in theory, but when you said that you don't necessarily believe that buying a home is the American dream, I don't believe it is. I think people having financial comfort, the ability to have comfortable lives, raise their families, that to me is the American dream. And a lot of times that involves owning a home, and sometimes it may not. But I don't think, all I'm saying is that we're talking about pitting two things against each other, that it is now buying a home, but the asset is coming from what would have been compounding in the retirement. So it is a perfectly acceptable thing for people to do, but it isn't creating any new money. It's moving from one pocket to the next. That's all I'm saying. And I think that it might potentially incentivize some behavior that could be ill-advised.
What it is.
All they're doing is streamlining something that people can do right now. That's what they're doing.
And so you're saying the people that have some liquidity but don't want to use it by borrowing from their 401k, right. It gives them the ability to move the money from their 401k to a down payment.
Right.
They now have less money in the 401k compounding in the investments. So their retirement has money that has come out of it, mm-hmm. but then they're able to go buy that home with it.
And when I say about the American dream, I just don't like the guilt associated with like you haven't achieved the American dream if you don't own a home.
Right.
But if it is your dream, this is a way to get cash to put a down payment down, and you don't feel like you've been left behind.
It also presupposes, Dagan, a return on what those homes are going to do that looks like the past. That might be a very bad idea. If we think that people's 401k assets are going to go up 10% a year, do we think their home prices are going to go up 10% a year? Because if we do, I just want to be clear that means we think home prices are going to double in 7 years. Does anyone want the home prices to double again in 7 years?
They have to go
because
down.
then you're going to have blood on the streets if that happens.
We are going to get more
You know what?
stuff around this plan next week at Davos.
It's your money. It's a 401k plan. It is your money, and you should be able to take it and spend it however you like.
I'm for the freedom of it. I'm just referring to what I think might be the best thing for people to do. I totally agree with you. It's their money. They can do what they want within the tax limitations.
Top Trump administration officials, including Transportation Secretary Sean Duffy, are in the Midwest to see firsthand how their policies are lowering car prices and boosting U.S. manufacturing. David, I'm going to come straight to you on this. Which piece of it are you more interested in, fuel economy standards or the Made in America aspect?
I'm interested in both because one of them I'm really, really, really happy about, and one of them I'm really, really unhappy about. And that's so much of what I think is happening in economic policy is there's push-pull things going on where there's certain things they're doing that are so beneficial to middle-class Americans and other things that are hurting. And that's the story to me of 2026 in the economy is that what is going to win out, the good stuff or the bad stuff. There's no question that addressing these fuel economy standards is helpful to bring prices down and helpful for middle-class purchasers of an automobile where average price is at $50,000. Yet, the idea that tariffs are helping the buyers is clearly not held up in the data. The steel and aluminum tariffs in particular put an extra inflation in auto prices last year, both used and new, that is really problematic. And so we have two things working against each other.
But does it do what the president says, which is because the tariffs are there, it raises those prices for the cars that are imported, but it ushers you towards
all domestic car prices are higher. All used car prices are higher. This is why the whole idea that we're only going to make prices higher on what is being imported and it won't somehow magically get priced into the other things in the economy, it just isn't true. And so, no, it has not made any domestic manufactured cars cheaper. And by the way, they can't make them. The ones that are not going to be made overseas, that's not going to happen in the next year or two. That's a longer term thing. I don't believe that investment's ever going to take place because of labor cost. It's a thing, we've talked about a lot where when we address one issue wrongly, it keeps us from addressing the other thing. We were talking about that in the last segment, Brian, about supply and demand solutions of housing. We have a labor cost problem with the unions, and we're not addressing that. And so to me, there's a distraction going on. But look, to the fuel economy stuff, I think they're doing everything right.
And we want to look at Vail. And what I was looking up is if you buy a single day pass to ski in Vail, it's $335 a day. That's if you buy it at the mountain. It is expensive.
That is expensive.
What?
Vail Resort saying that visits are down 20% season to date.
What about the snow problem, though?
Well, they can't do anything about that. That is up to God, as you know. But that has been the major issue. It's why the stock was down a ton last year. We came in because that cyclicality is built into the multiple of the stock.
So $100 million investment and a lot of prayer is what you're saying.
No, you can't just rely on praying for the snow to get better. That's part of their company's business model, so that's kind of baked in the pricing. But this whole thing, they replaced the expensive passes, the expensive day pass with this epic pass, and there's some people buying it for a whole season. It's totally changed the company's economics.
I will say, even if the weather is bad, it's just a beautiful town to be in. But go ahead.
How much is the season pass?
Well, I'm not sure because it's going to vary on when you bought it, and there's age differences, family passes. There's so much optionality, and then they have a bunch of technology now with an app and ski lessons that are included. So they've bundled pricing a lot.
When I lived in Aspen, but the jobs that I had, I got a full mountain pass.
Oh wow!
But it was any mountain in the Aspen range, and it was any day, all day. There were zero restrictions because it was an employee full mountain pass. I skied 200 days in 2 years.
Wow.
What's beautiful about it
I
is
should quit my job right now.
But see,
What are we doing?
that whole deal is great for you, and then these passes are great for the consumers that are going to do it, and then they're great for Vail because there's a ton of consumers that aren't. So it gives them that kind of consistent cash flow.
For years, Americans were told college was the best path to career success, but new technologies are challenging that old playbook. Meanwhile, blue-collar America is hiring and paying.
I think there's a great opportunity here for people entering the workforce. I think it's limited and where you're going to see career changes and transitions, but I think you're going to see a lot of younger people going this path, and I think it's a great idea.
David Bahnsen, always good to see you, my friend. Thanks for being here.